Chamath Palihapitiya recently said SpaceX could acquire Tesla at a 50% premium. That's $600 per share. He called it obvious industrial logic. He's been emphatic on the All In podcast that the merger case is strong, and that Tesla investors could be looking at a significant payday. I run a valuation model on Tesla every single day. Right now, it says Tesla is worth $267.38, not $391.06, where it trades today. Not $600, where Chamath wants to buy it. $267.38. So either Chamath is wrong, or the data is wrong, or, and this is the most interesting possibility, they're both talking about completely different things. That's what we're going to figure out today, and with Tesla earnings 6 days away, the timing couldn't be better. Let me be clear up front, the merger thesis is not stupid. Chamath is one of the sharpest investors of the last 20 years, and the logic he's laying out deserves to be taken seriously. Here's the core argument. Elon Musk currently runs 2 publicly traded companies. That means 2 sets of quarterly earnings calls, 2 boards, 2 sets of regulatory obligations, doubled overhead on one of the most valuable minds in business. A Tesla SpaceX merger immediately cuts that in half. Beyond that, there are potentially meaningful synergies across supply chain, energy infrastructure, and compute. A combined entity could simplify hardware, AI investment, and capital allocation decisions that currently sit in 2 separate organizations. Whether those synergies fully materialize is a separate question. But the logic of consolidating them isn't unreasonable. And then there's Starlink Cellular, what Chamath called the most underestimated asset in the entire Musk empire. The idea that Starlink becomes a global mobile carrier, bundling direct-to-cell connectivity with payments, AI, and vehicle integration. A phone service with the potential for truly global coverage, backed by infrastructure that would be extraordinarily difficult for any competitor to replicate at scale. If all of that plays out the way Chamath sees it, $600 might actually be cheap. So, why does my model say $267.38? Here's the distinction that matters most in investing. You don't buy a future. You buy a business at a price, and that business either justifies the price or it doesn't. So, let's look at what Tesla's business is actually doing today. Revenue in 2025, $94.83 billion, down 2.9% year over year. The core business is shrinking. Net income, $3.79 billion on $94.83 billion in revenue. Tesla's net margin is 4.0%. For context, Visa's net margin is 50.1%. Now here's the number I care about most. ROIC versus WACC. ROIC, return on invested capital, tells you how efficiently a business turns every dollar it deploys into profit. Tesla's ROIC, 4.3%. Tesla's WACC, the minimum return it needs to justify its own existence, 13.1%. 4.3% earned, 13.1% required. On this metric, Tesla is not currently earning its cost of capital, and the market is pricing this business at a PE of 387.1. Let me put that in perspective. You are paying 387.1 times Tesla's current earnings for a business whose revenue is declining and whose return on capital is a third of what it costs to operate. Invyra's fair value model, based on these current inputs, puts Tesla at $267.38. At today's price of $391.06, you are already paying a 46.3% premium to what the underlying business is worth. Chamath wants to add another 50% on top of that. So the question isn't whether Chamath is right about SpaceX synergies and Starlink Cellular. He probably is. The question is, how much of a future that hasn't happened yet should you price into a business whose present is declining? Here's how I think about this. There are 2 completely different investments being discussed, and people are treating them as if they're the same thing. Investment 1. The Tesla business that exists today. Declining revenue. Thin margins. ROI. See below cost of capital. This business, valued on its fundamentals, is worth $267.38 according to Invyra's model. Investment 2. A bet on the future. SpaceX merger. Starlink as a global carrier. Optimus, robotaxi, full self-driving at scale, AI revenue streams that don't exist yet. This is what Chamath is buying at $600. Neither view is irrational, but they're not the same decision. If you buy Tesla today at $391.06, you are not buying the current business at fair value. You are already paying a 46.3% premium on a declining business. I'm betting that the future vision comes true fast enough to justify that price before the present reality catches up. The higher the price you pay, the faster and more perfectly that future has to materialize. At $600, the margin for error is essentially zero. This is the thing most retail investors miss. They hear the vision, they believe the vision, and then they forget that price paid determines return earned, regardless of how good the story is. 6 days from now, Tesla reports Q2 2026 earnings. Wall Street expects 52 cents EPS on $25.81 billion in revenue, about 30% EPS growth year over year. But here's what I'll actually be watching, and it's not the headline number. Automotive gross margin. If Tesla is growing EPS while margins are compressing, that's not quality earnings growth. That's cost cutting dressed up as performance. Any concrete update on Cybercab and Robotaxi? If the AI and autonomy narrative is going to justify $391.06, let alone $600, we need to see a timeline, not a vision statement. Revenue trend. 1 quarter of minus 2.9% year over year could be noise. 2 quarters makes it a pattern. If Q2 revenue is still declining, the gap between the story and the business widens further. One more thing worth noting. As of today, Tesla's stock is trading below both its 50-day moving average of $409.97 and its 200-day moving average of $417.36. Envyra's technical model now reads a strong downtrend, with Williams %R on both timeframes flashing bearish. The price action is confirming what the fundamentals have been saying for a while. I'm not saying the Chamath vision is wrong. I'm saying the data today doesn't support the price today. And earnings on July 22nd is when we'll see whether the business is moving toward that vision or further away from it. Chamath Palihapitiya might be right about everything. The merger, Starlink Cellular, the synergies, all of it. But investing isn't just about being right about the future. It's about paying the right price for the right business at the right time. Right now, invyra says the business is worth $267.38. The market is pricing it at $391.06. And one of the world's most prominent investors is talking about $600. Only one of those numbers is anchored in Tesla's current fundamentals. If you want to run the same analysis on any stock, fair value, ROIC versus WACC, financial health, and technical signals, invyra gives you everything in one place. Link is in the description. No credit card required. I'll be back after July 22nd earnings with a follow-up. Let's see what the data says then.